Welcome back to the Passive Road to Retirement podcast. We're your hosts, Andrew Jarrett and Nick Cooper. Today, we're joined by Yuri Alex. Yuri is a real estate investor with 8 years of experience and the founder of Golands Capital. He is the owner-operator of 2 small multifamily buildings, which he rents out long-term and short-term. He is a house hacker and a private lender to fix and flip real estate investors. He's also invested in over 500 apartment units. Yuri, welcome to the show.
Thank you, Andrew and Nick. Very happy to be here.
Well, we're awesome. Glad to have you, Yuri. So I'll kind of start off real quick. If you could just tell us, hey, what kind of started you in real estate?
So I was with my W-2 job. I've always liked real estate in general. My dad was an entrepreneur in Colombia, South America. And that's always been in the back of my mind. But I was with my W-2 and I met this guy that was working with me. He was my coworker and he was already dabbling in real estate. Fast forward to today, he's very successful. He was my first mentor and he helped me get started with fourplex. So I would have never thought about my first deal being a fourplex. But I had a mentor, a friend from my old job that helped me along the way, and that was my first exposure to real estate. I did have a single family home that almost doesn't count. It was an investment, but I had a tenant there. But yeah, basically that fourplex with this mentor from work was what got me introduced into real estate investing.
Yeah, it was your entry drug. So what about that fourplex made it such a good deal and a good way to start?
So something my mentor always taught me was look for deals that will improve your lifestyle significantly. Don't just look for any deal that you have to work a ton. You're probably going to learn, which is good, but you're just going to work a ton. And then at the end, all you have is that experience. But the cash flow is really not there. So even if you take longer, so don't do as many deals, just find that one gem that's always going to significantly increase your lifestyle. That fourplex was one of the reasons I was able to quit my W-2 job early 2021.
Yeah, I love it. It can be just that one deal away from freeing you. So it is that one deal. Like same as for me, I took my 24 units, what freed me as well. So no, I love it.
That's awesome.
Yeah, absolutely.
So how'd that deal work? Did you come up with a down payment? Did you guys partner on that? Kind of maybe you can go through the specifics on how that came together.
So I analyzed a ton of properties, duplexes, triplexes, fourplex. I actually put offers as well. Jacksonville, Florida, Orlando, Cocoa Beach, Tampa, Sarasota, St. Pete. Those were like my markets that I was. I was living in Miami back then, so I was also looking in Miami, but I knew it was probably not gonna be in South Florida. So I was just doing a lot of driving around. I used to call it back then real estate patrol. Then I found out it was called driving for dollars. So I used to do that a lot. Started getting educated, listening to Bigger Pockets podcasts. There weren't that many podcasts back then, so pretty much Bigger Pockets was like the only one that was known. So just listening to a lot of podcasts, reading the books. So all of that education, driving around and understanding the local markets, got the people around me to trust me into doing a deal with them. So my dad, for example, he's an entrepreneur. He had sold a property in Colombia. He wanted to partner with me. He never would offer to partner with me before, but then he saw that I did the education. I understood the local markets and I know what was a good deal or not. So I partnered with my dad. My wife had an apartment in Miami. She also trusted me. She said, we're going to do this. She sold her apartment in Miami. I had a house in Orlando. I also sold my house. So we all pitched in together. At the end, we were still short like 50,000. We brought my brother in with a smaller amount of the equity. So it was really just finding the money, and at first it's easiest with your immediate closest family members. And as you start, getting more track record, then that extends to your uncles, cousins, friends. and then the sky's the limit. So yeah, but that's basically how I started and how I funded the deal.
I think that's a good thing for everyone to kind of remember that's listening is like when you're first starting out, you go to your power base. And that's going to be people that know you because a lot of them may not understand real estate, but they trust you and know that you know what you're doing.
Yep. And it took me getting educated, really knowing the markets. So when they asked me questions, I really knew what I was talking about. I had a solid business plan. Every property was different. Some were good for Airbnb, some were good for long-term rentals. So just getting all that knowledge and creating those business plans gave the confidence to my wife and my dad to invest with me. And we all pitched in and we were able to do our first deal.
Hey, everyone. Hope you're enjoying this episode. Are you ready to maximize your real estate investing to its full potential? Send an email to andrew@jarrettcapital.com and take your life and business to all new levels. That's andrew@jarrettcapital.com. Maybe you can talk a little bit more about private lending. So you lend to fix and flip real estate investors. I believe you've done some fix and flips on your own as well, right? How that transition worked.
So I wouldn't really say on my own. I've had a partner with whom I've done the fix and flips. I did one on my own, but I would call that more of a wholesale deal because I didn't do anything. I just sat on it for a few months and then sold it. So yeah, I had a partner with whom I was doing the fix and flips. Very solid guy. He does about 15, 20 flips a year in Jacksonville, Florida. And with him, we did a few flips. And then I became a private lender for him. So I don't really do private lending for anyone. It just happened. It just, the structure of our deals made more sense by me being a private lender. Worked for me, worked for him. And then we did that a few times as well. And then as I dabbled more into larger multifamily, which is what I did later, I started pivoting those funds and kind of just going and investing them in multifamily.
That makes sense. And you prefer multifamily now, I'm guessing, to single family?
Yes, I'm a big believer on looking more at your return on effort. I really love how Brandon Turner calls being an architect of your business, not a DIYer, not a self-employee, not a project manager, and hopefully not a COO. The fourth one, it's being the architect, where you're just providing the energy and you're the face of the business. But you hire people to do everything. So those are the businesses that I like. And then having that mindset and then learning about multifamily syndication, it basically put it all together because that's exactly what I like. I like doing things where we have a team, where the roles are established. Everyone has a defined role and everyone gets compensated having that role in mind, depending on what they do in each deal. And then the sky's the limit. You're able to scale, rapidly and continue to do more partnerships or strategic alliances.
That's a great point. It's not just the working harder. So a millionaire doesn't just work harder than you. He works on the right thing and the right vessel to get you to that point. Like that's why you're in multifamily, because a lot of these deals to close, because you have a team and whatnot with multifamily, take as much work, sometimes less than a single family deal.
Absolutely. You get the economies of scale. You maximize those operational efficiencies, and you're able to do a lot more things with the same or with less, dividing, taking into account how many people are involved, helping out, for due diligence, to make important decisions, asset management. There's just so many people that are involved in these deals with a lot of combined expertise that it just made sense to me when I got introduced to this asset class. And of course, there's things that I want to apply to do different with the experience that I've had. There's always ways you can improve. You should always continue to strive to be better, which I am. I'm definitely pivoting, adjusting, changing, just to make sure my business is always getting better and better.
Oh, yep. Makes sense.
Great points. And I agree with multifamily. I mean, single family house, maybe there's 500,000, right? You're playing with multifamily. You could be doing a $50 million deal. You can afford better management. You can afford better attorneys, more people. There's more slice to the pie. So there's definitely advantages to that. Now, you spoke about house hacking as well. Maybe you can kind of go into detail, how you've done that and what you're doing, what that looks like.
Yeah, so we started on the renovations for the fourplex. It was all short-term rentals, and we were still not making any income. We didn't make any income on that property for the first 2.5 years. So we're still looking for ways that we can, get some cash flow. I was still with my W-2 job. So in 2019, we were looking at properties, and specifically more duplexes with me and my wife. We wanted to have our own deal. We didn't have any partners at all. So we looked at a bunch of duplexes, and we got pre-approved. That puts a lot of pressure on you to pull the trigger. So, I analyzed a lot of properties, and I guess I was in the right place at the right time. I didn't know it back then, but it was a great time to buy real estate. And I was able to find, a few deals. We also found the house of our dreams for almost the same price. And we we were disciplined, and we said, we found the house of our dreams. We maybe can afford it, but we're just going to stick to investing, and we're going to do a duplex. We're going to rent one and leave the other. So we passed on our house of our dreams, and we did a duplex. And then fast forward to today, that was great deal. We're pretty much, that deal pays for about 90% of 85% maybe of our mortgage, insurance, and taxes. We only have to come up out of pocket like $500. And we rent a small apartment, which is a 2-2, and we live in a 4-3 on the other side. So it's very comfortable. We're not really sacrificing anything. It's a very comfortable place. We can have guests come over and visit us. It's just a lot of space, and we get to almost pay for all of our living expenses by having a tenant next door. So
That's what I call winning.
yeah, definitely one of the best business decisions that we've made. And it was tempting to buy the house of our dreams, but we're gonna hold off on that. That's coming later down the line.
It's a short-term sacrifice for long-term gain. I think you're thinking in the 5-10 year timeline when a lot of people think about, hey, what's the best for me the next 6 months or a year? So you're thinking more of the long term.
Yeah, definitely. Looking for instant gratification, it's not the right play if you really want to accumulate wealth, if you want to secure a good future for your family, multi-generational wealth. There's definitely usually the good deals, the more risk-adjusted deals are going to be long-term. So that's something to take into consideration.
No, I like it. And just kind of shifting gears a bit, I see you on social media and you're doing a lot of stuff in Spanish and whatnot. Can you kind of expand upon that?
Yeah. So as I was getting, I haven't been doing multifamily syndication for a whole lot. I've only been doing this for about like 15 months, which is when I met Nick. So of funny story. I don't know if we'll have time to tell it, but anyhow. So I've only been doing this for not a while. So I figured I have to get my track record. I have to do deals. And while I do that, I think the best use of my time is to build a brand, a personal brand. While I learn the business and while I get involved, and also create my platform, create my infrastructure. What I mean by that, it's having a really good website, having a good email sequence, so you can send emails to your email list, posting on social media. So that's been the main focus of my first 12 months in the business. While I started doing deals, most of my time was being spent at building my brand, creating my infrastructure, my website, my email list, and social media. If you want to really grow your audience through social media, you have to be consistent, very consistent. So I've been posting 5 times a week, and I've been doing it since December of 2021. I went from 300 followers. Right now I have a little bit under 2,100. So it's still not a lot, but it's growing, it's growing. And I'm getting the right audience. I'm happy to say that I have raised capital from investors that I met through social media. We didn't have friends in common. We didn't know anyone in our circle. They're already investing with me. So it's already paying its dividends. I'm also adding a lot of value. I'm also thinking of social media in the long term. I'm not too worried about how do I monetize it. I'm not concerned about how much money I'm going to make on social media. That's not, if you want to get into social media, that's really long term. It's really about establishing your brand, and you should monetize way, way later. If you do it too fast, that's also a mistake. I like the strategy. I think it's Gary V. He says, it should be his strategy for social media and just building his brand in general. It's jab, 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 and then right hook. So you first add value many times, and then you worry about, how you can monetize if there's an opportunity, but it's going to come organic, which I love. I don't like to be a salesperson. So I figured, let me just add value to people, teach them how to invest. I don't only have stuff about a multifamily. I also talk about me being a house hacker, because it's what I'm doing. I also talk about fix and flips, because I've done a few. And I also talk about short-term rentals, because I am a short-term rental operator. So I only talk about things that I have personal experience with, and of course, multifamily. But I'm not trying to, in the short term, monetize that in any way. Just adding a ton of value to people, creating an audience, creating a community, and then and the sky's the limit.
I think it's a great thing because you're telling your story, and that's what people gravitate towards, especially on social media. Is you're telling that story of how you're doing it, and from personal experience. If you're just spitting facts, that doesn't really resonate with an investor and whatnot. Like the whole old saying is, what's that? Facts tell and stories sell. So I think that's what I've seen you do as far as like what you're doing is like people gravitate towards you, and you're the brand.
Yeah, and you mentioned something about me doing it in Spanish.
Yeah.
So I've always been big on a niche, focusing on a niche that's gonna allow you to actually have people actually listen to your message.
Mm-hmm.
If your message is broad and it's for everyone, then you're gonna get no one to listen to it. But if your message is direct and specific to a target audience, then some people will listen to it. It's better to have some than no one. So having said that, I always figured that Latin Americans like myself, they don't have access to this type of deals in multifamily. They don't have access to the same amount of education. They also have a language barrier a lot of times. So my vision was to kind of bridge that gap by doing all my content in Spanish so they could learn about real estate, house hacking, short-term rentals, fix and flip, multifamily, and they could have access to better deals that like multifamily, passive deals that they could invest in, things that they would have never found on their own. And that's kind of where I come in. So that's why I wanted to do it in Spanish. I've always been tempted to kind of just go back to doing it in English, but I'm so far I've been able to just stick to that audience that has already grown from where I started, and so far so good. Excited about the future and just keep going.
That's great. Yeah. So speaking of, today is May 3rd, right? 2023. We've got the Fed's decision tomorrow on whether they're going to, hike rates, pause, whatever's going to happen. I guess looking forward, there's a lot of, people that are scared, unsure right now in the market. With that being said, what are you most excited about right now? And is there anything that kind of makes you nervous or keeps you up at night looking forward?
So I am excited about the opportunity that's coming for real estate in general. Whether you want to go into being a fix and flipper, right now it's not a great time to do it. I think in a few months it's going to be a great time to do it. If you want to buy a small multifamily, if you want to buy large multifamily, if you want to invest passively in multifamily deals, I think that there's going to be a lot of opportunity. I'm actually very excited about the things that are coming so far, because here's what's going to happen. So the Fed is going to probably raise one time, maybe raise two more times, probably 25 basis points. That's the consensus. But interest rates already peaked. They already peaked, they're going to stay more or less at the same level. They've actually come down, and they just keep going up and down at around the same range. But they already peaked, and we're no longer going to see those 75 basis points increases. And as soon as the Fed stops raising, mortgage rates are going to come down. All rates are going to come down for commercial too. And that's when things are going to get very interesting. There's a lot of multifamily operators that are in pain right now, which creates a lot of opportunity for multifamily syndicators or investors in general, because this is good. This applies in all asset classes in real estate. If you want to buy, you're going to find great deals. Yeah. So that's what I'm really excited about. And of course, I've already had some experience. I've already done 3 deals as a general partner and 2 deals as a passive investor. So I'm going to apply everything that I've learned to make sure that I can continue improving the quality of the deals that I'm doing, and improving my skill set, improving my systems, just to make sure that I continue to bring very good opportunities for my network.
No, I love it. And I think kind of to expand upon what you said, as far as with multifamily, most deals right now are going to be, even with the debt, probably anywhere from 10 to 20% off or so. So if you just hold these deals and they cash flow, when you can refinance it, you're going to have that value just realized. So that's just a good way of thinking about, hey, you have to think of the macro, but also if you think longer term, like in the 5-year horizon, like you're going to be all right.
Yeah, imagine a deal working today in this market. How good is that deal going to be in 2 years, and then in 4 years? So I'm really excited about that. Looking forward. And the greatest transfers of wealth happen in these type of cycles. So it's the time to be learning, to be educating yourself, to be active, to be looking at deals, analyzing properties, learning, understanding the markets, and pulling the trigger. So I think it's probably the best time in the history to do that.
I'm with you.
For somebody just starting out, looking to get that first stream of passive income, what would be your number one strategy for them to go out and get that?
So if they want to do passive income specifically, I would still recommend them to get some education. Of course, they're not going to be active in the deal, but they should still be get educated enough to mitigate their fears. If they've never invested passively, it's scary to just hand, $50, $75, $100,000 to someone else and not have any control of that. So do your homework. If you have a job, or if you have or real estate, or you're not an active investor, that's fine. But get some level of education so that you're comfortable making the decision. And so a lot of times, more important than the deal is the operator behind the deal. So there's 3 things. It's the operator running the deal is probably the most important one. The market where the deal is, super important, and then the deal itself. Those are the 3 things that you need to learn a little bit about. Maybe not be an expert, but know enough so you can feel comfortable making a decision. And then just make a decision. Interview operators, general partners that are doing deals. Interview them. Ask them hard questions. What is your track record? What has gone wrong in your deals? Do you invest money in your deals? What is the biggest mistake you've made? Ask those questions, everyone's going to answer them differently, and it's going to give you an idea of how they think, how they invest, to make sure it aligns with your investment objectives, your risk profile, your values, your personality. So that's my advice. Just get some education and start meeting the players that are active, so that you can decide who you're gonna invest with.
Great response. I think that's just hits the nail on the head. Is like a lot of times it's the operator. So a great operator can make a bad deal good and a good deal great.
Very true.
100%.
What would be the? We got one more question, then we'll get into our 5 to thrive. So, what would be your number one takeaway for our audience to absorb from this episode?
Many things. So I've done a few things that, different. We've spoken about short-term rentals, fix and flip, house hacking. They're all great strategies. I think that investing in real estate, there's nothing wrong on the decision more than making a decision. So they all were great for different people. Now, for me, the reason I got involved in multifamily syndication is because I wanted to be involved in opportunities that had a passive component. So I want to go back in the part of the episode where I mentioned where there's a team involved. Everyone has a role in the project, in the investment, and is very defined. And then you combine all that experience, and then you're able to make decisions in the future when you have problems or how to improving things, and just, doing great. When you have that team in place, it allows you to do that. So for anyone listening to the episode, I switched from doing smaller deals into more passive opportunities because of that, because there's a team in place with a track record, with experience. So that you don't have to worry about toilets, tenants, and time, because even though I recommend a little bit of education, you don't have to invest the same amount of time that we do on these deals.
Yeah, it's a great point. Totally agree with you there. What would be a good way for people to reach out and contact you or follow you on social media?
So my Instagram handle, which is where I post the most up-to-date content, it's Yuri Alex Investor. And my email is yuri.gomez@golandsgroup.com. I want to spell Golands Group. It's GOLANDSGROUP. And, you can just send me an email. You can add me on Instagram. It's the same handle for YouTube, Facebook, and TikTok. Yuri Alex Investor. You can, find me there.
Awesome. So now we get into our 5 to thrive section. So this is a word association game, and I'm just going to rattle off 5 words right in a row. Just give me the first word or phrase that comes to your mind. And the only caveat, you cannot repeat your answer twice.
Okay. Oh boy.
All right, here we go. First one is private lending.
Great cash flow.
House hacking.
Best first investment ever.
Multifamily.
Best passive investment.
Time freedom.
Everything.
And Golands Capital.
It's a great company that offers risk adjustment opportunities for investors to passively invest, where we diversify operators, locations, markets, and different risk profiles within the assets. We do C class, B class.
Awesome.
Okay.
Well, Yuri, thanks so much for coming on the show. It was great to have
Thanks,
you.
Yuri.
Thank you, guys. I appreciate it. It was a great time.